Good morning, everyone, and welcome back to the channel. If you're an Australian retiree or someone receiving Centrelink pension payments, you absolutely need to hear what I'm sharing with you today, because this could mean a significant boost to your finances in the coming months. Make sure you stay with me right until the end of this video, because I'll be breaking down everything you need to know about these payment increases, who qualifies, and most importantly, how you can ensure you receive every dollar you're entitled to. Now, before we dive into the details, I want to remind you to hit that subscribe button and turn on notifications so you never miss important updates about government payments, pension changes, and financial news that directly affects Australian retirees. Trust me, you don't want to miss out on this crucial information that could put thousands of dollars back into your pocket. So let's talk about what's happening right now with Centrelink pension payments. There's been a lot of buzz and confusion circulating online about double payments, special boosts, and increased amounts landing in pensioners' bank accounts. I'm here today to cut through the noise and give you the facts based on official information from Services Australia and the Department of Social Services. First things first, let's address the elephant in the room. Are pensioners actually receiving double payments? Well, the answer is both yes and no, and I'll explain exactly what that means. What we're seeing is not a permanent doubling of pension payments, but rather a combination of scheduled increases, cost of living supplements, and the timing of regular pension payments that can make it appear as though some recipients are getting double what they normally receive. The Australian age pension is indexed twice a year, typically in March and September, to ensure that payments keep pace with the cost of living. These indexation increases are calculated based on the Consumer Price Index and the Pensioner and Beneficiary Living Cost Index, whichever is higher. What this means for you as a pensioner is that your base payment rate increases periodically to help you maintain your purchasing power as prices rise across the economy. Now let's break down the numbers that have people talking. For a single pensioner, the maximum base rate of age pension has increased substantially over recent indexation periods. When you combine this with various supplements and additional payments, some pensioners are seeing their fortnightly payments increase significantly. For couples combined, the increases are even more substantial. Over the course of a year, these increases can add up to several $1,000s in additional support. The figure that's been mentioned widely, around $4,800, represents the approximate annual increase that maximum rate pensioners might see when you factor in indexation adjustments, cost of living payments, and energy supplements over a 12-month period. This isn't money that arrives all at once in your bank account, but rather it's distributed across your regular fortnightly payments throughout the year. However, when you do the math and calculate the difference between what you were receiving before recent increases and what you're receiving now, that annual difference can indeed reach into the thousands of dollars. Additionally, there have been targeted cost of living payments announced by the government to help pensioners deal with rising expenses, particularly around energy costs, housing, and essential goods. These one-off payments, when they occur, do create situations where pensioners might receive their regular fortnightly payment plus an additional lump sum payment in the same period, which can certainly feel like a double payment and provide welcome financial relief. The additional boost of around $1,500 that people are discussing typically refers to supplementary payments that have been rolled out as part of government cost of living relief packages. These payments are designed to help pensioners cope with specific financial pressures, and they're often delivered as one-off lump sum payments separate from your regular pension. It's important to understand that these aren't permanent increases to your base pension rate, but they are real money that eligible pensioners can receive. So who exactly qualifies for these increased payments and additional boosts? Generally speaking, if you're receiving the age pension, disability support pension, carer payment, or certain other income support payments from Centrelink, you'll automatically receive any indexation increases that apply to your payment type. You don't need to apply or do anything special to receive these increases. They're automatically calculated and applied to your payment by Services Australia. For the additional cost of living payments and special supplements, eligibility can vary depending on the specific program. Typically, you need to be receiving an eligible payment on specific reference dates set by the government. For example, If the government announces a cost of living payment for pensioners, they'll specify that you must be receiving an eligible pension on a particular date to qualify. If you meet that criteria, the payment will be automatically deposited into your nominated bank account, usually within a few weeks of the announcement. It's worth noting that these additional payments are usually not means tested beyond your existing eligibility for the base pension. This means that if you're already receiving a pension payment, even if it's at a reduced rate due to your income or assets, you'll likely still receive the full amount of any cost of living supplement or energy payment that's announced. This is different from how your regular pension is calculated, where your individual circumstances can affect how much you receive. Now let's talk about the practical side of things. When can you expect to see this money in your account? Your regular pension payments continue to be paid on their normal schedule, which is typically fortnightly. Any indexation increases are applied from the effective date announced by the government, usually March 20th and September 20th each year. If there's a delay between the effective date and when the increase is actually processed, you'll receive back pay to make up the difference so you won't miss out on any money you're owed. For one-off cost of living payments, the government usually announces a payment schedule when they announce the payment itself. These typically roll out over several weeks, with payments being deposited progressively across the pensioner population. Don't panic if your neighbor or friend receives their payment before you do. Services Australia processes these payments in batches, and as long as you're eligible, your payment will arrive. You can check the status of any expected payments by logging into your MyGov account and checking your Centrelink information. Here's something really important that catches some pensioners off guard. Sometimes you might notice that your pension payment seems lower than expected, even with these increases we've been discussing. This can happen for several reasons. Your pension amount can be affected by changes in your circumstances, such as changes to your income, assets, living arrangements, or relationship status. If you or your partner start receiving additional income, even from sources like part-time work or investment returns, this can reduce your pension entitlement. This is why it's absolutely crucial that you report any changes in your circumstances to Centrelink promptly. Failure to do so can result in overpayments, which you'll eventually need to repay, and in serious cases, it can even result in penalties. On the flip side, sometimes pensioners don't receive their full entitlement because Centrelink doesn't have accurate information about their circumstances. If you believe you should be receiving more than you are, it's worth contacting Services Australia to review your payment. Let's talk about how you can maximize your entitlement and make sure you're receiving everything you're eligible for. First and foremost, make sure your MyGov account is set up and linked to Centrelink. This is your portal for managing your payments, updating your details, and checking important information about your pension. If you're not comfortable with technology, consider asking a family member to help you set this up, or visit your local Services Australia office where staff can assist you. Next, review your circumstances regularly and think about whether there have been any changes that might affect your payment. Have your assets decreased in value? Has your income changed? Are you paying more in rent than Centrelink has on record? All of these factors can influence your payment amount, and sometimes updates to your information can actually increase your entitlement rather than decrease it. Make sure you're receiving all the supplements you're entitled to. In addition to the base age pension, there are several supplements available, including the pension supplement, energy supplement, and potentially rent assistance if you're renting. These supplements can add hundreds of dollars to your fortnightly payment, but sometimes they're not automatically applied if Centrelink doesn't have complete information about your circumstances. It's also worth investigating whether you're eligible for any concession cards. The Pensioner Concession Card and Commonwealth Seniors Health Card provide access to cheaper medicines through the Pharmaceutical Benefits Scheme, bulk billing at medical centers, and various state and territory government concessions on things like energy bills, car registration, and public transport. These concessions can save you thousands of dollars per year, effectively boosting your spending power beyond just your cash pension payment. Now, I want to address some common concerns and questions that pensioners often have about these payment increases. One question I see frequently is whether these increases will affect other benefits or payments. Generally speaking, increases to your pension payment itself won't affect your eligibility for supplements and concessions that are tied to pension receipt. However, if you're receiving income from other sources in addition to your pension, significant increases to your pension might affect means-tested benefits from other programs. Another common concern is about taxation. Age pension payments themselves are taxable income, although many pensioners don't end up paying tax because their total income remains below the tax-free threshold. If you're receiving other income in addition to your pension, increases to your pension payment could potentially push you over the tax-free threshold, meaning you might need to pay some tax. If you're unsure about your tax situation, it's worth speaking with a tax professional or contacting the Australian Taxation Office for guidance. Some pensioners worry about whether accepting these increased payments or additional boosts will somehow reduce their future entitlements or affect their pension down the track. I want to reassure you that this is not the case. These payments are designed to support you, and accepting what you're entitled to now won't negatively impact your pension in the future. Your ongoing pension entitlement is based on your current circumstances and the pension rules in place at the time, not on what payments you've received in the past. Looking ahead, it's important to understand that pension rates and supplements can change with each federal budget and with ongoing indexation. The Australian government reviews pension adequacy regularly, and changes can be made to payment rates, eligibility criteria, and income and assets tests. Staying informed about these changes is crucial for financial planning. This is exactly why following reliable sources of information, whether that's through channels like this one, the Services Australia website, or consultations with financial counselors who specialize in retirement income, is so valuable. If you're struggling financially, even with these increased payments, please know that there are additional supports available. Services Australia can provide advance payments in certain circumstances if you're facing financial hardship. There are also crisis payment options available if you've experienced specific eligible events. Beyond Centrelink, many community organizations offer financial counseling services, emergency relief, and assistance with essential costs. You're not alone, and there's no shame in reaching out for help when you need it. Before we wrap up, I want to emphasize the importance of being cautious about scams. Unfortunately, whenever there's news about government payments and financial support, scammers become more active. Services Australia will never contact you asking for your MyGov password, asking you to click on links in text messages or emails, or demanding immediate payment of supposed debts. If you receive any suspicious communications claiming to be from Centrelink or Services Australia, don't respond. Instead, contact Services Australia directly using the phone numbers on their official website or visit a service centre in person. So to summarize everything we've covered today, yes, Australian pensioners are seeing significant increases to their payments through a combination of regular indexation, cost of living supplements, and targeted support payments. While these aren't permanent double payments in the literal sense, the additional money flowing to pensioners over the course of a year can be substantial, potentially reaching several $1,000s for eligible recipients. The key is understanding what you're entitled to, ensuring your information with Centrelink is accurate and up to date, and staying informed about new announcements and changes to pension payments. Thank you so much for watching today's video. I hope this information has been helpful in clarifying what's happening with Centrelink pension payments and what you can expect in your own circumstances. If you found this video valuable, please give it a thumbs up and share it with other retirees who might benefit from this information. Drop a comment below letting me know if you have any questions or if there are other topics related to retirement and government benefits you'd like me to cover in future videos. Remember to subscribe and hit that notification bell so you stay updated on all the latest news affecting Australian pensioners. Take care, look after your finances, and I'll see you in the next video. Claude is AI and can make mistakes. Please double-check responses.